Welcome back to my channel. I am C. Gayatri Samyukta Shetty, and today we are going to discuss on the topic material variance analysis. Variance analysis is the identification and the examination of the difference between the budgeted behavior or number against the actual behavior number achieved. जो हम बजट करके डिसाइड किए थे कितना होना चाहिए अगेंस्ट द एक्चुअल जो हमें मिला है एट द एंड ऑफ द period of our production or operations, which helps in understanding and analyze the reasons for the unfavorable or the unfavorable outcomes. Favorable होगा या unfavorable होगा depending. अगर budgeted meet करते actual को then it will be favorable. If it exceeds, then we are going to have the unfavorable outcomes. Let's see what happens. Helps in understanding the reasons for the differences between the standard set and the actual achieved, and in giving importance to those areas which need improvement. Helps the business to analyze the past data. Past data में क्या हुआ तो उसको हम एनालाइज कर सकते हैं एंड टू मॉनिटर द एक्चुअल कॉस्ट अभी एट प्रेजेंट में कितना एक्चुअल खर्चा हुआ है वो एज अ होल एंड टू प्लान फॉर द फ्यूचर एक्सपेंसेस इन अ बेटर वे एंड एक्चुअल के साथ सेट डाटा के क्या उसका रेशियो रहता है उसी बेसिस में हम फ्यूचर में कैसे प्लानिंग करेंगे वो भी हम डिसाइड कर सकेंगे विद द हेल्प ऑफ variance analysis. Right, let's start with the thing. Yes, हम कैसे करेंगे देख लेते हैं. Budgeted, standard, actual. Budgeted is budgeted quantity for budgeted output. Standard is budgeted quantity for actual output. And what is actual? Actual quantity for actual output. Okay, so where just for a simplification purpose, MPV is material price variance. कैसे निकालेंगे? Standard rate माइनस एक्चुअल रेट इंटू एक्चुअल क्वांटिटी. स्टैंडर्ड रेट इज व्हाट? स्टैंडर्ड रेट यहाँ पे हमें बजटेड दिया रहेगा, सम में एक्चुअल दिया रहेगा, तो स्टैंडर्ड विल बी व्हाट? बजटेड क्वांटिटी फॉर द एक्चुअल आउटपुट. राइट, तो आउटपुट इतना एक्चुअल जितना आउटपुट हुआ उतने करने के लिए हमें बजट क्वांटिटी कितना होना चाहिए वो हमें निकालना है हर सम के लिए. फिर उसको हम निकालेंगे स्टैंडर्ड रेट माइनस एक्चुअल रेट इंटू एक्चुअल क्वांटिटी. ओके, लाइकवाइज मटेरियल यूसेज वेरिएंस, बजटेड, standard, actual, this is also same thing. Budgeted quantity for the budgeted output, this is budgeted quantity for actual output, and actual quantity for actual output. What is the formula? Material usage variance is equal to standard quantity minus actual quantity. Okay, what is the actual standard quantity minus actual quantity? The difference into the standard rate. Okay, standard quantity means budgeted output for actual budgeted quantity of input used for achieving the actual output, that is the standard quantity minus the actual quantity which we have received into the standard rate. Then we have the MCV. MCV means material cost variance, that is standard rate into standard quantity minus actual rate into actual quantity. Okay, these are the differences between the standard set for the actual output and this is the actual thing. This is the difference between that. And to check any sum for material variance analysis, we have to see MCV is equal to MPV plus MUV. That is material cost variance should always be equal to the summation of material price variance plus material usage variance. Right? Okay, there are two parts also, material mix variance and another is material yield variance. What do we see? Let's just, if it is a sum which has a mix A and B, two products 90 and 60. So what will be the rate? 2 per unit. Okay, the actual quantity 100 is 100, so we get 150 standard quantity, 200 standard ratio for actual input. If actual input is 120 and B is 80, but this we have already said for 90-60. Okay, actual ratio for actual input 100%, 100%. So we can see from the this is the standard set, this is the actual already achieved. Okay, so we can see this is one is favorable and one is adverse from the formula itself. Right, why adverse? If the standard exceeds the actual, then it will be favorable for us, and if the actual exceeds the standard set, then it will be unfavorable for us. Similarly, we do the material yield variance. In this case also, that is standard set for the actual A and B. These are two things used in ratio 90:60. So and rate is 4 rupees per unit, this is 2 rupees unit, standard cost 360, just this is a multiplication of this. Actual quantity is 100 and this is 100, and what do you see? The total difference between the two is actual quantity 90 60, okay, standard, this was actual was 100. So we can see there is a difference of between the quantity 50, okay. So what was the adverse rate was 3.2. So the answer is adverse because we set for 150, but in actually we had to use 200 quantity, so it was 160 was the adverse material yield variance. Okay. Now let's do some sums to understand what are these formulas, how do they work. Let's see. A Limited uses standard costing. Okay, it provides the following details for the year 2020-21 leading to its materials. Find out the material price variance, material usage variance, and material cost variance. Material used, budgeted amount was 50 kg. Then we have the actual is 80 kg. Okay, we say this actual is 80 kg. This is 80 kg. Okay, so we move the C. Material price variance SR minus AR into AQ. Okay, here budgeted input is 50 kg for budgeted quantity of 100 units. 50 kg was input. Okay, 50 kg was input. Just see, 50 kg is input and 80 kg was actual input. Budgeted was fixed at 50, actual is 80. And again the output is 100 for budgeted case, and output for actual case we see it is 120. We get the outputs. Okay, and material price per kg standards is set at 20 and actual is in 30. We see this actual price is rupees 30 and this is rupees 20, right? Per kg this is the price. Let's see how we will do the sum then. Okay, material price variance we have to find out first. So standard rate minus actual rate into a actual quantity. So first we see we have the standard for finding out the standard quantity of input. We have to first find out that portion from the actual input and the budget input. Just see, budget input is 50 kg for budgeted quantity of 100 units output. Okay, and actual quantity is 80 kg for actual quantity. This is output, we don't need this first. So standard quantity, what we find out, the standard quantity is always the budgeted quantity for actual output. Okay, so we can see if for 50 input we are getting 100 units of output, so we can find out for 120 is actual quantity of units output. So this 50 by 100 into 120 we get 60 kg as the standard quantity. We have been provided by the sum for budgeted quantity and the actual quantity. We have not been provided by standard quantity. What is standard quantity? Budgeted quantity for the actual output. For 50 units, by using 50 units we get 100, but if we want to get 120 units, how much standard quantity we have to have? That we find out 60 kg here. Okay, now we just see, we have just placed it in the chart. Just see how it is runs. Budgeted quantity for budgeted output is 50 kg. Okay, output is 100, price is 20. Standard, which we found out by working, budgeted quantity for actual output. This is the actual output 120, and so for getting 120 kg we have to use 50 kgs and actual has been used 80 kg. Okay, and price is given 20 and 30. Let's see. Okay. Price, material price variance, standard rate minus actual rate into actual quantity. Here standard rate was 20 and actual rate was 30. So 20 minus 30 into 80, actual quantity has been given 80 kg. So we see it, since the actual rate is more than the standard rate, so it is minus 10 into 80. So the result is an adverse because standard rate is less than actual rate. So we have been paying a more amount, right, than the what we have budgeted. And then we find out the material usage variance, that runs like this: standard quantity minus actual quantity into standard rate. So standard quantity we found out 60, actual quantity is 80. So 60 minus 80 into 20, standard rate is 20. Again here also we get the answer as 400 adverse, right. Again we see the material cost variance, standard rate into standard quantity minus actual rate into actual quantity. Standard rate is 20 and the standard rate is 20 and the standard quantity we found out is to be 60 minus actual rate 30 given, actual quantity given 80. So we are getting 1200 for the standard rate into standard quantity, and for this we are getting 2400. So again the answer is 1200 adverse. We always, to cross check whether the sum is right or not, we know that material cost variance is always equal to the summation of material price variance and material usage variance. Just say it is 1200, and what we are going MPV, what did we get? We got MPV is equal to, see, we got 800 adverse, 400 adverse. So MPV is 800A and this is 400. That amounts to be 1200 adverse. So we can prove that the sum is right. MCV is equal to MPV plus MUV. We always have to remember that we have to find out the standard quantity will be the budgeted quantity used for the actual output, right? Thank you.